Hello and welcome. This is Enda here from bullwebs.org. And welcome back. It's been a long time. It's been pretty much a month since I've been able to do a video. And I apologize for that. I have been pretty much consistently ill for the last month between the flu and a chest infection and so on and so forth. I haven't been able to sustain doing a video for probably a month, but basically because I haven't been able to talk consistently. I'm almost there now. I'm almost back, but don't be surprised if I break out into a fit of coughing in the middle of this because it's not quite gone yet. My chest has been. I'm sipping tea now as I speak. My chest has been, just ravaged by an infection over the last, 8 or 10 days. That followed on from a flu, which I had for the previous, 2 weeks before that. But anyway, here we are. It is now the 8th of November, and we're rolling into the end of the year. And we are at new all-time highs, and we are at insane levels. Literally insane levels of delusion across the world in so many different fields. It just measure it in the stock market. There it is. It's delusion all around. So here we are, and let's see if I can make some sense of it. Many of the markets are actually, running along in patterns quite, strangely enough, quite predictably. I'm looking at one right here, euro dollar, and it's been running in quite a predictive pattern over the last month. Since we were talking last, it was probably October this decline had begun. So I may as well start on the 4-hour count in euro dollar. This is let's go to the daily count first. What I'm looking for is a 5-wave decline in wave C. So we had tracked 3 waves up into wave B, and now I'm looking for 5 waves down in wave C. The minimum target here is about 104. That'll be break of the wave A low. So 5 waves down in wave C. Let's see how that's been going. So this is wave 1 down, I think. And wave 2 up completed this week. We didn't even get much of a bounce in wave 2. I was expecting a little bit more. I think we got about 38% retracement there in wave 2. Now that becomes the resistance to the decline, to any rally, sorry. So this becomes the invalidation level for this count. So if wave 3 is underway, which I think it is, so we have wave 3 of C, and I suspect wave 3 will get me down somewhere around that 105 level again. So there's the minimum target is 104.49, so 104.50. But overall, the flat correction, wave C should break below 104. That we should get down, maybe even 103. Before I was talking about down to parity again. That's quite possible, but we'll see how the pattern goes. Okay, so I think we have wave C underway. It looks like it's pretty solid top for wave B in place. We've got a 1-2 pattern. We have another impulsive spike lower, so that should be the beginning of wave 3, and we'll see how this pattern develops next week. Okay, as usual, if you want nightly updates, you come to bullwebs.org and join up the membership, join up the website, and you'll get nightly updates. I haven't reneged on the nightly updates. There was a couple of nights over the last month that I just only could manage a chart update because I was so damn ill. But every night I've been there, doing my duty. So if you like what I do, head over to bullwebs.org and become a member. Okay, so here we go. Pound dollar. it's a very similar pattern. Let's go to the daily count again. Again, it's a 1-2 pattern, and where wave 2, slightly different on cable. It's an expanded flat correction, so we've got 3 waves up. We broke above the upper trend line. Probably when we were speaking last, we were up around that upper trend line there. We had a throw over in wave C of B, and now we're working down in wave C of 2. So we've got like a 3-3-5 pattern going on here. I would suspect we get down somewhere around 117, below 120 anyway, to complete wave 2. And once we get down there, then we'll start looking for some sort of bullish reversal there. Go to the 4-hour count and you see this 3-wave pattern higher. We've got wave A up, wave B down, and then we've got a 1, 2, 3, 4, 5, kind of a wedge pattern into the high of wave B, throw over, and then a breakdown in an impulsive manner. There's a few different ways you could view this. It could be wave 1 here, it could be an expanded flat correction, wave 2. We didn't get much of a retracement into wave 2. If you take the extreme low here as wave 1, then we got just below this 38% retracement in wave 2. And then, if this count is correct, then we're heading lower into wave 3. Wave 3 of C of 2. Sorry, we'll be down further there. So 5 waves down in wave C. If the current short-term count is correct, then we have wave 3 underway, and this should do the lion's share of the work here. Should probably bring us back towards, below 125, maybe even below 124 to complete. So this will be an interesting one to watch over the next 2 days. The short-term pattern here is not conclusive yet on the hourly chart. Looking for a third decline. We don't seem to have that yet. So this is still unresolved here. Maybe we're going to go to a new high in wave 2. I don't know. We should know early. We should know by Monday evening, I think, whether wave 3 is underway or not. But overall, wave 3 of C should begin next week, or we should see sizable declines in wave 3 of C in this scenario. Okay, so dollar yen. What's happening in dollar yen? We go to the 4-hour count. You can see overall, looking for a top in wave C of B here, if I'm correct. Wave C of B, 3 waves down overall, actually into wave A. First of all, that's the larger pattern here. We've got an A down, ABC up in wave B, and then wave C down. That's the basic premise here over the next month or so, probably into the end of the year. So if wave B is coming to a halt pretty soon, I suspect then we'll get a turn down into wave C. But I don't think wave B is done just yet. I think we may have a final 5th wave rally in wave 5 of C of B. And if I'm correct here, then we have wave 1 and 2 correct. But or wave 1 and 2 complete at the moment. Now, so far, we're holding a higher low here above wave 4. So this wave 4 low here at 151.28 or 151.30 has to hold before we turn higher into wave 5, before it can confirm wave 5. But a rally in wave 3, let's clean you up a bit there. A rally in wave 3 of 5 should break above, let's stretch it to the wave B high, 154.70 before confirming this. That might be a long way up to wait in terms of a trading opportunity, but so far, well, the first thing to look for the rest of the day and for let's say overnight and Sunday night and into Monday is for that wave 4 low to hold. Once that holds and we begin to creep higher, that will suggest that we are building into wave 3 of 5, but that has yet to be confirmed. So that's what I'll be looking for on Monday. We'll see how it goes. Okay, daily count, nothing has changed really here on the daily count. We did have a nice move lower last week, which I thought again was in the area of concern, or in the area of, let's say, um, to watch out for some sort of reversal. We have wave A down into the 22 lows on the daily count here. So we have that 3 waves down into the wave A low, October 22. Now we've had this 2 years of a sideways to upside rally. It was a long time it didn't go anywhere, and then we exploded higher this year. But the thing to note here is that we came to a stall and a reversal at the 162% extension of wave A. So wave A down extended off the wave A low, give you the wave B top, and that's 162% of wave A. That came in at 42.5, let's say call it 42.550. The rally this week, obviously, just a knee-jerk reaction to whatever happened in the election, and then we are now at a culminating at a trend line within wave 5 here. So if we go down to the 4-hour count, I'll show you that fifth wave. So here's a possible count for that fifth wave. We have wave 3 top, A, B, C. It's a running flat correction, wave 4. So A down, B up, and C down in wave 4. And from there we have 1, 2, 3, 4, 5. So this is not quite a wedge pattern. Let's try that again. If we go for a standard Elliott channel, you can see the price has wave 4 just about held above wave 1. First of all, so we never got to the confirmation of a reversal, even though I did like the decline last week. But we never got to a confirmation by breaking wave 1. So the reversal came in a fifth wave. So obviously we broke out of that pattern. We still have the makings of a top here in wave 1, 2, 3, 4, and 5 of wave 5 in green. So wave 5 in green is pretty much close to a completed pattern, a 5-wave pattern standard. We ran up to the upper trend line, and now we're closing out an Elliott channel. But the larger channel here, you can see, probably would allow for a little bit higher. However, I don't want that to happen, but that's just the way we are. We're in this kind of euphoric post, let's say, election euphoria. Excuse me, in the States. So people will do what people are going to do. Forgive me. What 5 waves up is, again, just another hat tip towards the possibility here. Not going to say much more about that. We'll see what happens next week. The euphoria will die off eventually. So we'll see how it actually manifests next week. Okay, so let's move on. Now, we have an interesting move lower in gold this week. We actually, you can see we were working higher in 5 waves in wave 3. We drew that Elliott, we were probably working on that Elliott channel the last time I did a video, but I may have even shown that the last time we did this video. But 5 waves up, triangle wave 4, wave 5 ran up to the upper trend channel line of that Elliott channel to close out wave 5, and then we've kind of reacted reasonably well off the top there after tagging that upper trend channel line. If wave 3 is done, then we expect a decline in wave 4, and that's the larger count. That's what I'm looking for. Wave 4, you would expect to find support at the previous 4th wave at 1 lower degree, so that comes in at about 22 to 2300. So if we were go directly at the 4th wave triangle low, somewhere about 2290 to 2300. Which from the current highs is quite a sizable decline. So let's go to the 4-hour count here. You can see there's the triangle low of wave 4. and we had wave 1, 2, and then wave 1, 2, 3, 4, and 5 in wave 3, 3 waves down in wave 4, then 1, 2, 3, 4, and 5 in wave 5. We just tagged the lower degree trend channel. You broke slightly above the trend channel for wave, let's say wave 3 here, and the trend channel for wave 5 in green, you can see marked here, between the wave 2, wave 4, and extended off the wave 3 high. So we've got wave 5 within a trend channel. The fifth wave ran up, failed below the upper trend channel line there on the wave 5 green channel, but we had a breakout slightly above the larger trend channel. So qualifies as a throw over on the larger channel, even though quite a small one. So far, wave 4, the idea is that wave 4 will come our way. Let's get a label in for that. So wave 4 in red to correct back to the previous fourth wave at one lower degree. If that happens, then you're talking about, between 22 and 2300. So call it 2250. We've got about 2680 now. So about $420, $430 of a decline. Now, the pattern for wave 4 can go wild. Fourth wave corrections can go in many different ways. So far, we have 3 waves down. Now, that could be the beginning of wave A down. So let's get a wave A here. And then we go up in wave B. And down in wave C. That would be the simplest form for wave 4 in red. The problem is we have no idea how this internal pattern here is going to break out. So it could be a flat correction. We could get 3, 3 down in wave A, 3 up in wave B, and then 5 down in wave C. We could get 5 overall, an overall 5-wave decline in wave A. There's no way right now to know which way this is going to break out. So I suspect that wave 4 in red is underway, but the internal pattern here has not shown its hand yet. We're going to be tracking it anyway in a few different ways, and we'll see how it actually breaks out next week. But so far so good. The decline was expected and it has come in. So we have yet to confirm this larger degree fourth wave, but that's where my mind is heading at the moment. Okay, now crude oil. This is a daily count on crude oil, and for the moment we are tracking a fifth wave down in wave C. That is quite a high degree count here now, so there's a lot of leeway in this. But for the moment, this count has worked quite well. We were tracking that triangle for a long time into, let's say that, July high of wave E. So we were tracking that all throughout the summer, topped out at wave E, and it came down impulsively. So that was the idea during the summer. It has worked out well so far. We're actually moving lower within a trend channel, the larger degree trend channel. So we haven't broken the previous wave 3 yet. So I think this larger degree fifth wave will be confirmed once we break below, let's say, $60 again. For the moment, there's no reason to change this. This is working quite well. On the 4-hour count, you can see that that wave 4 triangle high, and we have 5 waves down in wave 1, 3 up in wave 2. And we're looking at a lower degree 1 and 2. And today we're kind of moving lower again. So if this count is correct, then we are moving into wave 3 of 5 over the next few months. So we should see further downward pressure here on oil prices, which can only be good for all of us, basically. So that's the wave 3 decline. If we are getting wave 3, we probably will be talking about $50 oil sooner than you expect, sooner than everybody even wants to suggest. Now remember, during the summertime or even earlier this year, all that everybody wanted to say or anyone wanted to say was, $100 oil again, $100, $100. I think even Goldman Sachs put out, this really long client missive suggesting that we were heading to $250 oil, before, um, 2025 or something like that. There was just a big long-term prediction, for crazy crude oil prices. Whereas, my little pattern was suggesting that, we're going to head lower. This is a triangle, and we're heading lower into wave 5. Guess who came out on top there? Yeah. Okay. Um, the reason I like crude oil is it's less um, influenced by mass hysteria. There's a lot more straightforward patterns, straightforward, economic reality going on here. And what does declining oil prices and even longer term declining oil prices say about, economic prospects here? There's something wrong with the underlying assumption that things continue onwards and upwards forever. I would tend to agree with the oil traders over and bond traders over the stock market, which is so heavily influenced by, short-term, even at the close, uh, you know, uh, short-term options, daily options. It's crazy how heavily influenced, day trading and daily options and option flow has on the actual trading within the market. It's absolutely insane. But that's where we are, and until everybody loses their shirt, I'm afraid that's just what we have to deal with. Okay. Anyway, crude oil. Let's go to the 4-hour count again. I'm suspecting that we will move lower into a third wave over the next few weeks. That's where my outlook would be. We had 3 waves up. We retraced just above the 62% retracement level, and we came, down quite hard out of that rally. So, the pattern suggests that we're moving lower into a third wave, and if the shorter term pattern is correct, we're moving into a third of wave 5. So, could be even more of an acceleration lower. What's the bets we hear of opening the spigots for production in oil production in the US and Saudi Arabia at the same time? Because I know Saudi Arabia wants to crush a lot of dissent from its neighbors, including Iran. It would really like to crush Iran and win back the Chinese market. I know that for a fact. And I know that the US would really like to shut down a lot of the revenue for Iran and Russia. So that's a very strategic window of opportunity there for them to do that by, basically oversupplying the oil market. Okay. I know the Europeans would be quite happy about it. I'd be quite happy about it. I think the voters in the US would be quite happy about it. I think Saudi Arabia, long term, would be more than happy with $50 oil, and especially if they chew up a whole load of the market share. But anyway, getting too much into geopolitics, and I should be concerned specifically with patterns. But anyway, the pattern in oil seems to agree with like the incentives within the crude oil market now. Okay. Here is the S&P. Here is the 5th wave pattern within wave 5 green. Excuse me, I'm trying to stop myself from coughing here. I'm talking and trying to stop my lungs from opening up and landing on my laptop. Okay, so wave 3 and 4 done. Wave 5, 1, 2, 3, 4, 5. 5-wave pattern. The 4th wave low did not cross over the wave 1 high. An explosive rally this week. We do have a throw over in place above the larger trend channel. We have the market now closing in on the upper trend channel line, the smaller degree trend channel line, and there's no point in even putting a trend channel on the 5th wave rally here. Suffice to say that it will close out. It'll most likely close out this channel, and at that point, then we'll look for a reversal possibility again. Okay, so let's move on. We have silver. Go to the daily count in silver. Now this is a pattern in silver that I just cannot get out of my mind. Okay. Now don't shout at me. Don't scream at me. Don't scream inflation, inflation, so on and so forth. You know, if I know food inflation has really ticked people off, including me, over the last few years. But I think that may have much more to do with pumping free credit into and free giveaways into people's pockets directly. During the pandemic, over 2021 and 2022, than anything else. Especially, I've been reading a lot of the comments from food producers over the last week and few weeks, and we see from food producers a lot of downward guidance. A lot of we're not expecting sales to be so robust over the next over the next quarter, over the next year, and kind of disinflating the prospects for sales. And I think that may have a lot to do with if I can open up this chart here from Zero Hedge today. It may have a lot to do with what's happening right here. This is not just Americans. This is the Western world in general have burned through their savings because these were the giveaways that we all experienced. Every government in the Western Hemisphere did this. They just pumped out giveaways, supports, interest-free loans, so on and so forth. And then that has been draining down over the last year. This is where you got your food inflation from. This is where you got your car inflation from. This is where you got, how would you say, everything this is where you got the options market, the explosion in daily options market. This is where you got that from. And now, what do you think happens when there ain't no free cash flow? There ain't no free cash flow left to spend on all that stuff. Okay, so silver. This is a daily count in silver that I've been tracking. It's an alternate count, but it's a possible count. So it's 3 waves up in wave B. We've got wave A, wave B, and then a 5-wave pattern. 1, 2, 3, 4, 5. Classic 3 waves down in wave 4, followed by a classic 5-wave pattern higher in wave 5. And if you do go to the 4-hour count, you can see that 5th wave pattern filled an Elliott channel perfectly, tagged the upper trend channel line, and then revolted off that upper trend channel line. So if this is a 5th wave top in wave C of wave B, which is at the moment, granted, it's an alternate count. If this is what I think it could be, then we've got trouble ahead. There will be trouble ahead in the silver market. Now, could we go back down below wave A, the alternate wave A here? Yes, we could. We could quite easily. we could go back down to $15 easily in wave C of 2 if this is correct. Now, it's not the base case scenario, but the base case scenario is for a series of 1-2s, but that's what I've been watching. I just cannot kill this idea here. If we continue lower, especially if we break, we start breaking some, internal supports here. So if we break $30 again, that will lean heavily in favor of the idea that we're moving lower for longer. If we break 26.40 again, that's the previous fourth wave low, then I think we might be in for it in silver. Okay. I think that's about it. I think it's about as much as my voice can actually take at the moment. I hope you enjoyed that. I hope you found it interesting and useful. If you do like what I do, head over to bullwaves.org. I'll show you the website. This is so here's my website, bullwaves.org. You can sign up on the check out the prices on the prices tab there. Sign up for nightly Elliott wave analysis. You can join the email me. There's my email on the front. You can join the mailing list and get free weekly updates. And if you like what I do, if you want nightly updates, check out joining the members area. And with that, oh, sorry, I never even showed that, did I? There's the website. Forgive me. Here's the website. There's my email there if you want to contact me. You can join the mailing list by get the free guide there, and you can, if you like what I do, check out the members area. Join the members area. Okay. Now, that being said, those of you who know me know that I always end. Oops. Yes, there we go. I always end the weekly video presentation with the presentation of the good news. And this is probably usually where I lose all my customers or potential customers. But anyway, I am a follower of the Messiah who came 2,000 years ago, who died on the cross for our sins. And if you accept and believe and put your faith in him, then your sins are paid for. And if you don't understand what I'm presenting here or what the gospel is or what the good news is, feel free to email me and we can talk. The Messiah came. It was prophesied hundreds and hundreds and hundreds of times in the Hebrew scriptures. He is a Jew. He was born in Israel. He was born in Bethlehem. Lived in Nazareth. He did countless miracles. He is the Son of God, the incarnate God on earth, the only one who could live the perfect life to pay for the sins of others. They say that, if in antiquity, in the Hebrew, the time of the law of Moses, if an animal could pay for the sins, or a lamb could pay for the sins of a man or a family for 1 year, and a bull could pay for the sins of a nation for 1 year, and a man's life could pay for the sins of a man's life for a lifetime, then who possibly could pay for all the sins of mankind for all time? And the only possible answer is that God himself reached in to the stream of time at the perfect moment, because God is perfect, lived the perfect life, died fulfilling the scriptures that he wrote himself, fulfilling the prophecies that he gave himself, at the perfect moment. And all he asked is for your faith. So that's what I'll present to you. That's the good news of salvation. You don't have to do it. You don't have to work. Every other religion says you have to work your way to heaven. You don't have to do that. In God's economy, God has done it already. All you have to do is accept it. Okay, that's that. Hopefully, I will be, back to 100% health next week, and I will be back with a weekly video on Friday as usual. Until then, God's blessings to you all, and I will see you on the other side.